Today is Tuesday, October 1st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. Starting with the financials this morning, Alan. Yesterday, Federal Reserve Chairman Powell offered some comments. What did he say and what are the implications?
Okay, well, yesterday, Powell's comments were not quite as dovish as some analysts had anticipated when he said the recent 50 basis point interest rate cut is not a sign of similar moves ahead. And he clarified that the central bank is not on any preset course. However, it is widely expected that the FOMC will reduce its interest rate in the November meeting by another 25 basis points and also by 25 basis points at its December meeting. And easier monetary policy is likely to continue well into 2025. So a long period of likely accommodation from the Federal Reserve should benefit futures mostly at the front end of the curve. And it looks like this is going to be a very long-term bullish trend. But I stress we need to be at the short end of the curve. That's where most of the benefit from easier credit conditions is likely to occur.
Gold and silver, Alan, both markets have been moving. What is the price outlook for these two commodities?
Okay, well, both gold and silver are substantially higher today in light of the increased geopolitical concerns in the Middle East. Gold and silver futures are likely to trend higher, but any gains most likely, I believe, will be led by the gold market in light of its safe haven status. Silver is also considered to be a safe haven vehicle as well, but some of the strength may be limited by silver's industrial component, especially in light of recent signs that there may be a slowdown in the global economy. So silver is likely to be the leader to the upside. Both gold and silver, I think, will trend higher, but I would focus my attention on gold. That is the one that has the most bullish fundamentals.
Turning toward the ag markets, Mark Soderberg, any big surprises in yesterday's USDA report?
No huge surprises, but a couple things did jump out. Corn stocks at 1.76 billion bushels. While that was up 400 million from last year, it was about 85 million below the pre-report expectations, depending on which set of estimates you were looking at. This suggests to me that there was a record amount of feed usage in Q4 for the 23-24 marketing year. On-farm stocks as of September 1st, were put at 780 million bushels. That did drop nearly 2.25 billion from June, indicating a record amount of farmers selling in the last 3 months of the old crop marketing year. And to me, that helps explain the price weakness here, particularly in the latter half of August. Recall ending stocks for 23-24, they were nearly 2.2 billion bushels just 6 months ago. So now at 1.76, we're down over 400 million bushels, which is providing much less wiggle room for a crop problem in South America this winter, as we are seeing declining production estimates in Europe. U.S. export demand should remain strong, and I think keep a good support underneath the market. The other thing that jumped out to me was the winter wheat production forecast. Well, it was lowered 11 million bushels to 1.349. That was in line with expectations. But what we did see was harvested acres rose just over 500,000 acres, while yields fell 1.5 bushels an acre to 51.7. So now just over 78% of the winter wheat acres were actually harvested for grain. That's the highest in 8 years now, and it's much, much closer to its long-term average. Last year, only 67% of the crop was harvested for grain. This due to drought conditions in the southern plains, and as many acres were left abandoned.
And Mark, we talk about the large spec positions from time to time, commitment of traders, and these traders have lightened up on their short holdings in the ag space. Do you expect that to continue?
I do, Kurt. Money managers, right. They have been net buyers in the ag space now for 6 consecutive weeks and 9 of the last 10. Their combined short position across the ag space now is about a fifth of what it was at a record large short position just over 2 months ago. Index funds, they've also been pretty healthy buyers in the ag space, and net buyers now in 5 of the last 6 weeks. Now, with many of the contracts in the ag space having bounced off of their 4-year lows, I'd look for this trend to continue. With the Fed shifting into easing mode now, Chinese government providing additional stimulus to help try to prop up their economy, and now global weather, we're shifting into a La Nina pattern this fall. I think that's going to just add to the speculators continuing to buy. We're going to have record yields here in the U.S. I don't think there's anything that will change that moving forward, but I don't think the crop is going to be nearly as big as we thought just a couple months ago.
Mark Bowman, serious weather over the past weekend in the Southeast, tragic weather, really. How did Hurricane Helene affect the cotton crop?
So the hurricane brought rains and heavy winds to Georgia, and Georgia is the second largest state in the U.S. for cotton production. The weekly crop progress report yesterday showed, as of Sunday, 31% of the U.S. crop was rated good to excellent, which was down from 37% the previous week, and only slightly ahead of a year ago, which was 30%. Georgia, though, saw a big decline. They fell to 33% good to excellent from 59% last week. So that's 24% decline. This is almost an unheard of level. Conditions typically range between 50 and 75%. The 5-year average is 57%. Georgia's production as of the last supply-demand report was 2.05 million bales versus 4.156 million for Texas. So they're roughly half of Texas, but they're still the second largest producer. Other states, North Carolina also saw a decline to 50% from 76% the previous week and an average of 47%. They are the 6th largest producers. So it looks like Helene had a dramatic effect on production. Question is, or could have a dramatic effect on production. Question is, to what extent can these crops recover? If it's just rain and they get some sunshine, then that could allow the at least bleaching out of the cotton. But I suspect the damage is greater than that. You had high winds at some points, and so much rain it could have caused much more serious damage. In the last supply-demand report, U.S. production was projected at 14.5 million bales. That's up from 12.07 million last year, and slightly above the year before that at 14.47 million. We wouldn't be surprised to see reductions in the future, revisions lower due to these situation.
Yeah, we'll have to watch the numbers over the past few weeks and see if any of these plants can recover. Mark, we haven't touched on natural gas in quite some time. What is your outlook for natural gas?
Well, so the U.S. has had a burdensome supply for over a year, but that supply has been gradually whittled down. And on top of that, we see some expansion coming in U.S. export capabilities. Last week's natural gas storage report was running 4% above a year ago and 7% above the 5-year average. But this compares to being 24% above back in March and 41% above the average. And we're in a seasonal build season, so we should be seeing builds every week. But the last 4 weeks, they've been below both a year ago and the average levels. Early expectations are for storage this week to show a build of 50 to 65 BCF. But the 5-year average for this week is 87 BCF. So we're still looking at coming at the low end. And there's more U.S. LNG facilities opening in the Gulf in the next couple of years, one after another, and that will enable more U.S. exports.
Thank you all. Okay. I'm sorry. Go ahead, Mark.
Oh, just one more thing. U.S. rigs in operation increased by 3 last week to 99, but this is down from 116 a year ago. It seemed like they were shutting rigs or not using them as prices fell, and the higher prices recently have brought some back online. But it also suggests that I think that the September low will hold.
Thank you. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.